There we go. All right. Well, thanks everybody for joining. I appreciate it. I think what we'll do today is we'll kind of show, of course, like the bullish and bearish scenarios for the indexes, and we'll kind of go through the rest of the the rest of the meat potatoes. But I guess one thing I really would want to show is kind of like just like more of a broad sort of view of what's going on. I've been kind of surprised. Oh, I wouldn't say I'm surprised, but I've been a little bit, it's been interesting. Let's just say that to kind of see what's been going on with the markets. I think a lot of people have still got that, like, it's bullish, and it very well might be. And I think the next couple days we're really going to find out whether the bull is dead for this sort of for this time frame, or if we're going to see another run up and hit another all-time high. I think it's entirely possible, but I still need to see like more participation and more ground recovered, rather than just like one day of markets are up 1.5%, and then the next day it gets sold down beyond that. Because right now we're just going through a bunch of whipsaw, and it's chopping a lot of people up. So I'm trying to be cautious right now with my entries, and so far, it's been working out, except for just hedges. So with that being said, is there anything specifically you guys would like to cover today? I'll write it on my handy dandy notepad. All right. Well, feel free to stop me if you got any questions, though. All right. So let's get rolling here. Okay. So I thought the Nasdaq was a good sort of. Sorry, let me get my stuff arranged. There you go. I have these like massive monitors, and sometimes you gotta pivot to drag stuff over. All right. So just looking here at the Nasdaq, this is just a clean chart from what we typically been looking at, and I've been kind of walking you guys through just normally like what kind of constitutes like resistance or support, and we've been talking about pattern expansion, all this sort of stuff. So what I'd like to do here is I'll show you, because I think again the Nasdaq's a little bit more bearish, and then the S&P doesn't really look as bearish. So I think that's why it's kind of a toss-up right now, where I think either a lot of bulls are being fooled, or a lot of bears are being tricked into a longer-term trap. Given how crazy the markets have been over the last couple of years, I'm kind of leaning towards it might be a bear trap. But like I said, I think we'll have a couple days here where we'll figure out whether it is or not. So I think we're now getting to the interesting part. So with this triangle itself, these are typically ending patterns. Now, if you, they don't always have to be ending patterns, but they typically end up being ending patterns. All the way from the bottom here, we can see we got like this sharp wave 2, and then you can make the argument we got a wave 3 here, or sorry, wave 4. And I'm just trying to reiterate here where we talked about last couple times. So you can kind of you can make out this wave 5 and this kind of tail on the end of it here. You can also kind of see it's kind of rounding out a little bit. It doesn't really scream strength. It just screams like we're making incremental all-time highs, and we're not really making a lot of progress. But another thing you can also see too is that we're starting to see a lot of volume pop up here. Before, when we had a couple of these little scares in October, they got bought up right away, but they also had very high volume. So that just tells me that there wasn't enough time to distribute a lot of those shares. So kind of zooming into the last couple of weeks and months here, that's what I think we're kind of seeing right now, is this just longer term distribution pattern. Now, typically with these ending sort of patterns, you can pick out these. I'll draw this like this because I think like you can make the case here that this is some sort of like pattern expansion. And really, what you want to look for, and if you're not a chart person, or if you're not a Elliott wave enthusiast, all that kind of thing, the important things to look for in triangles or consolidation patterns are these ABC patterns, and I'll kind of explain I think if there's one major takeaway here, it's every time you get into some sort of correction where you see this sort of move, this ABC, typically you can see other ABCs within these sort of with these sort of things, and they can expand. Um, and your wave counts can change. But again, if you're not like an Elliott wave person, you think it's voodoo magic, which is fine. Yeah, I've heard that before. You can at least still identify dips and little pullbacks like to your 50% ranges or even your 0.618 kind of Fibonacci levels. All those can be viable dips because typically if you see this ABC first, that usually means it's the first leg of a correction. Now, you don't typically want to try to time buying like around here, even though that would be sweet. Really what you want to do is you want to kind of try to wait and see what happens with the bounce. So, if we get something like this, sometimes you can tell if it's just straight up bullish. So you don't really want to miss it. But typically it's this little like, I'm sorry guys for my throat again. Um, Typically you want to target this little B wave pullback because you could always see bigger iterations of it that form after it. And one thing I wanted to show you guys today because I really thought this ended up being um, almost exactly uh, what this example is here. So I'm going to do kind of like the bullish case first, and then I'll kind of go in the bearish case because I'll probably focus a little bit more on that. Um, so to kind of measure this out here over the last couple days, we have seen. Sorry, let me zoom in a little bit more, kind of set the stage here. So over the last couple days, typically you measure, and now it's clear to show an ABC here. But typically, what you want to do is you want to like kind of measure this move. And we did see this extension past this, A equals C level at 100 here. That's that's kind of what that means. So when I type, it's at the A equals C level, that is a very common place to bounce. Another common place to bounce is at the 1.236 level. So I'll mark those here. And typically, if it sells down below the the 100 level, this A equals C, then what you can see is, I'd say probably like 70% of the time you'll see an extension. So also look for those like ABCs on the inverse as well. So I guess the main message here is that like you can see pattern expansion. Trend lines are relative until they're broken, and all sorts of things. But trend lines get stronger the more times they're tested. And once you see like a solid breach of one, and that was, see there a couple of, what was it? I think I was talking about this the other day. Yeah, where sorry, I had this like the trend line here for the Nasdaq. Like this kind of weird looking triangle, and we were talking about this ascending channel and all sorts of fun stuff. Well, then when we finally had that breach lower or that gap down on like that Sunday night, back in like middle of January, then it's like, okay, well, there's weakness. So then you kind of redraw the trend line, and you can kind of see that it was tested 2 more times, and then finally it broke. So yeah, you could keep adjusting the trend line, and you could keep making that case. But once it kind of like, you also got to remember that there's fake outs. Like, it's bearish fake outs, there's bullish fake outs. The bears want to obviously sell into strength, so they're going to want to kind of bait the bulls and to keep buying. Earnings season is pretty interesting to me just because you got a lot of buying and a lot of like position adjustments and stuff. But what I'm looking for is the next like major ABC here, or like connection point, and where it stops. So I guess the one of the things that I really like to focus on is I just kind of redrew that trend line for today. We just saw that, but it's also kind of at a convenient stopping point where typically you see these ABCs. So from a bullish perspective, kind of zooming back out here, from what we showed before, or what I showed before here, you could get this sort of like five wave sort of move here, and highly likely the 5-wave move is going to be this ABC. I shouldn't say highly likely; it will be an ABC, just because it's a huge consolidation pattern. You could get an extended C leg, and it could rip higher, that kind of thing. And I'll show you this on the S&P as well. But for Nasdaq itself. I think that if we don't make a new low, I'd say probably like the next day or two or something like that. Let's say if we end the week without making a new low, from what we had today, then I think the odds are it's probably like 60-40. We're going to be bullish for like one more little leg up. So, you could see, that happen also uh, with like a couple of the other stocks, like let's say, SOX or a couple of the other indexes and stuff that people typically trade. And I'll show you kind of what this looks like with the S&P as well. Before I do that, any questions? Does this not make sense? Am I speaking dumb here? Okay, good. So with the S&P, it looks a little bit, it's a bit different of a scenario. You could make the case here that there were 5 waves, and we didn't really see a breakout, but it's still like an ascending pattern. And from just a technical analysis standpoint here, when you see a pattern like this, typically that's the end, or getting very, very close to the end. What I in line with Nasdaq here, kind of like what we just talked about, I think you could see, like you might have just seen the B wave today of the final wave up. So again, like if we don't make another new low here past this like 68-40 level, that kind of thing, and I'll be looking for like options gamma at those levels too. So if you have like really, really, big thick lines of options gamma, like those will be tested, but ultimately either the dealers are going to hedge and buy up the price, and or the bulls are going to step in and do that. But I still think that is longer term. I'd say within a couple weeks, that's probably your most likely bullish scenario. And also to just real quick, like on the Dow, it's been hitting up this, it's like 500 times here over the last couple of weeks. But I do think that you'll see probably like a 50,000, and that this could probably be like a just an ending sort of pattern here where it just breaks out a little bit and then takes a big dive after that. So hopefully that makes sense from like a bullish perspective. It really does kind of boil down to whether we continue to make a new low or not. Now, I mean, I guess you could say it would be acceptable for some sort of low, let's say, and then, I'm going to kind of dig in a little bit more here. This is kind of what I'm thinking we might see, where that this is just a smaller iteration of the ABC, where we could see like a little bit more extended of a C leg, just because the last 2 days have been very high volume with selling, and there really hasn't been a catalyst. It's just been you wake up, there you go. Kind of like Don mentioned, I kind of felt like the same way, where this morning I'm like, oh, options are looking bullish here, and you might take out a long or something. I mean, I got lucky and I didn't participate, but you could take out a long, and then it just reverses, and you just get wrecked. But as you guys know, I've been very cautious over the last couple of months, just because I'm kind of thinking that like we might have some sort of longer term rollover. Now, there's no reason why you guys can't do like scalper trades or anything that anything that you want to try to make some money with. The only thing is that when we're at some sort of weird juncture like this, where you've had your lower trend line broken twice in last, let's say, like 2 weeks, in a meaningful way, then you want to try to take notice. So personally, I mean, when you see these things longer term, I'm going to chalk it up to like pattern expansion. So you see how, I mean, you guys know I say symmetry is important with this stuff, especially longer term. So when you're looking at like the 2 hour, the 2 hour sort of move here, I do think that you'll probably see something like this, where maybe this week you'll see some, maybe like another move down, and then, or like a smaller move down, but you'll see a lot more like support start to take shape. And that's where, you'll want to, like, if you want to do a long trade, you could ease in, but I wouldn't go nuts, just because there is weakness there. But like kind of like I said, even though we see The risk reward here, I mean, is pretty nice, 7%, right? But the odds of us having, let's say, and I'll go through this in the bear scenario in a second, but the odds of us having some sort of move like this down, where it's just an extended sea leg, and then everybody assumes we're going to see this, where it's just a new high. I have seen it before several times, where it actually kind of goes sort of like this, and it doesn't quite make the high, and then it just craters off cliff. And that would also be, I think we talked about this last week, but that could also be the start of like a wave 1, 2, and 3 down. Sorry, that doesn't make sense. Here you go. And these are a little bit more severe than like an ABC. So I don't want to drone on about it really, but I guess what I wanted to say is that there is a bullish scenario, and I think it's actually pretty likely as long as we don't continue to sell down, in a meaningful way. This 200 daily moving average is pretty close, but if you look at something like the S&P, it's not very close at all, at least not yet. So my thinking around this is more along the lines of really like capital preservation. We're starting to see things like silver and gold take a dive off the cliff. Bitcoin is broke like major support recently. Anything crypto is really just kind of getting shellacked right now. I don't really know how else to say it, for lack of better jokes. But really, when you're looking at this stuff, you're also starting to see the VIX wake up. And we haven't really moved much. We've only moved a couple percent. So now that we're starting to see a little bit of life here in the VIX, the odds are we're going to probably see some more, profit taking, or just people starting to think that, okay, maybe I've squeezed all the profits out of this rally that I can, and they're gonna try to get out. So I guess you could make the argument that both bullish and bearish scenarios could start bull. So it's just a matter of kind of what you see. So does that make sense from a bullish perspective? Questions, comments, concerns? I don't want any complaints. Okay. So let's talk about the bearish scenario. This one I think is going to be interesting, just because this is sort of, I kind of talk about these bifurcation points and things like that pretty often. But now like these bifurcation points are real when it comes to trading and trend lines and things like that, especially when you see a move where it gets sold through a trend line. Now, the bulls are going to want to do probably something like this, where they're going to try to reclaim the trend line and head back up. And you could retrace, a decent amount of this. But if it fails, and then we head back down, then it's the turkey's most likely cooked here. But once I zoom in a little bit, it's also important to know like what your measurements are. So I think I measured this out before. It's just past that. Okay, yeah, I measured. Okay, do that. Okay. So now if we do like this sea leg here, and then we measure this out, usually I also like to look for like a confluence of bid levels, and I don't really see that here at the moment. So I think either we're going to extend a little bit lower, and that might align with something longer term, or we're done. Like we've stopped at this. Like we've had some sort of truncated sea leg here with a lot of buy volume. Now, considering how the selling has been pretty strong, I don't really know if that's the case. So yeah, I guess as you kind of look at these charts, you start high, and then you want to you start at a higher time frame, and then you want to kind of go lower. And that's kind of why I've been measuring this as we go. But so I would say one thing we want to look for is here, this like 24,600, and the next level we'll look for is that. But first, we'll just want to take a measure here. So we kind of hit that 50 and reversed. I still think that we'll probably hit this point 618. So I think we'll see something kind of like this, maybe tomorrow, maybe tonight, who knows? But that would be that would be like a trend line test. Maybe we open tomorrow morning where we're a little bit lower, and then you see the bulls take it from there. I think it's likely that might that could also be like your kind of your signal to maybe get out of shorts. But it really kind of depends on what happens at these levels. So let's say you do see something like this. I just want to measure what this looks like here. So I'm going to give you guys some levels. So I think, let's say it extends all the way up there. So yeah, I mean, you could make the argument that if you had a C leg, you could probably extend a little bit lower and try to get some people to short the bottom before the bulls bulls step in a big way. But I guess fundamentally, this sort of pattern here is it's pretty predictable, I guess you could say. Like typically it either reverses at the 50 or reverses at the 0.618. And all throughout the day today, when we had this kind of consolidation pattern, all these things were retracing like 50% or 0.618, and like just watching this stuff today, like you can kind of say that or see like at a smaller time frame. So like this, kind of see like at a smaller time frame, you get these bounces at these levels, and you just you got to kind of chart on the fly. But I mean, you guys can see that this looks like a pretty clear ABC, right? So we measure this and we kind of go the opposite way. Okay, well, we could get pretty close to that trend line, and that's kind of what I think you're going to see here in the first first couple of hours here overnight. So you could probably just have like a we see, or you could also see something kind of like this. But so the main point here, guys, is typically when you see these sort of like counter trend moves, you always want to look at what the motive is. Like the motive to me is you want to reclaim this trend line. A lot of bulls got trapped today. They've been buying ever since the last couple of sessions here, and there's a lot of trapped capital up there. And typically when you have like surprise selling and they can't really control it, then you see a lot of this like gamesmanship. Like overnight you'll see the bears, or not the bears, but like the bulls, they'll gap it up, or the other side will as well. So long story short here is that I think we'll probably grind up a little bit more, and then we'll probably reverse, but it might not be very long lived. You might instead of seeing this like ABC to kind of return to that bullish scenario, you might see something kind of like this. And then that's where you want to take note of that, because most likely then you'll see the start of you'll probably see the start of this new like ABC up here to kind of finish off this pattern. So I guess key points, you just want to watch and see what happens. So if we get this this little breach higher, it all just kind of depends on volume. I mean, we've seen just several hours worth of high volume selling without much buying. I mean, typically when you see like kind of an evenly balanced distribution, you can see something like this where there's some blue bars, some red, but oftentimes when you see like these higher concentrations and just elevated volume in general, you will typically you'll typically see a continuation. So I'll give you one last doomsday scenario just for funsies. And if it comes true and you make profits, I get 10%. Looking at you, John. I'm kidding. All right. So doomsday scenario. I think it is entirely plausible that you could see. So let's say that the bear scenario comes to fruition, and we see a lot of this. We see a lot of selling. For the first wave down, you could absolutely see this, and it actually kind of looks a little symmetrical, just with kind of eyeballing the waves here. So with a wave 3, I mean, it kind of feels like a wave 3 to me. I mean, it's like everything that's bought is just sold down, and I try to take notice of that. So I mean, this is not like a real valid technical pattern, okay? But what this does show us though is that we've got this 200 daily moving average coming up here. Where is that 50? I don't think I have it. I think there's a different chart, but so the 50 is, I think we've already kind of sold through that or getting close. But the long story short here is that typically when you have a wave 3 down, like when you do hit this major sort of moving average, you will see some sort of bounce. But there's usually a war around those. So between bulls and bears or whatever. So if you're buying up top here and you're kind of expecting to play like that triangle we were talking about, if it breaches that lower sort of triangle, trend line, you'll want to stop out, or you'll want to get your, you want to get out of your longs ASAP, because you could see that just totally fall off a cliff there. So again, this is the doomsday scenario here. We don't have to, we don't really have to, go into much detail about it until it actually starts to happen here. But at least you guys, being on the call here, you're at least seeing the possibility. So, I just think about this like, okay, if I'm in your shoes and I want to try to make money, if I'm scared of shorting, well, you don't have to short. You could just stay in cash and then get back in once you start to see some high volume support develop. Typically, when you see something like at the end of the day, typically those targets will be hit, because each day is like its own microcosm of here's enjoy. like every day it seems like there's always a new setup that you have to read. It's like you pick up a new book for the first time, and at least in my experience, when you're trading some of this stuff like commodities and metals, like typically they move like at nighttime, but the markets, like equities really move during the day, like US time. And typically when the days end up, they either like end at the low or they are bought slightly up off the low, and that's it. So it could be like 2 or 3 days before it's either retested again, or sometimes you never see it again if you're in a strong uptrend. But we are in a consolidation pattern, and really what we're looking for are those breaches. So with that being said, any questions, comments on that? Danger full of shit. You could say that too. Okay, so now let's talk about some other stuff. Yield. I haven't really been following the Bank of Japan stuff, but I know that they've had like an emergency meeting about rates. I don't really think we're seeing much in like our sort of yields, but you never know. Like if we start to see some interest rate, manipulation or fluctuations, we could see something like that. As of now, this is some sort of like inverted cup and handle. You could see something like this, where it consolidates a little more than takes off. Possible, but for now it's just moving really slow. So I don't want to spend too much time on it. All right, now let's take a look at gold. So gold, big news here. When did this happen? This is Wednesday. Oh yeah, it happened after the webinar. Okay, so the interesting part here is gold had its big sell-off. Same thing with silver. And to me, this kind of looks like an ABC. So I think we might be looking at like a wave 4. I mean, even though I don't know, it was really deep, like that's super deep for a wave 4. That just looks like kind of covering and panic selling and leveraged exposure gone wrong. But I can also see, to be fair, I kind of see like 5-wave taking shape. And if that's taking shape, then you might actually see another leg up. It's entirely possible, because we saw one. When we saw some profit taking over here. So how we kind of saw this same sort of move, where we see this kind of ABC, truncated C, and then you see one of these 5 waivers, and then you can kind of see it pull back a little bit for wave 2, and there's jumps all the way up. So that's kind of what I mean. And with metals, you do get those like 5-wave or those 5th wave extensions. So it's just something to be aware of. yeah, I'll be honest, like, yes, I have taken a silver short, but I tend to get out of it as soon as possible. I'm just doing it for fun. So, um, I think that you probably have a little bit of a pullback here. So, um, if this ends up being this, 5 wave sort of thing, that's, let me, you know, yeah, it's right up at that, 0.618. And, if we do see some sort of reversal there, that's where I think you'll see a much deeper cut. And I always want to be, I try to be fair here with like bulls and, bullish and bearish sort of projections. At least now I do. I mean, I don't want to be, labeled as, super bear or whatever. Like, I don't know. I just think that there's a lot of excess going on. But this is entirely possible too. Like you could see a bottoming at around like 4,100 for gold. And that could be a pretty good correction. Um, you could see it extend lower, but it just depends on what's going on with the markets. I think that once gold and silver have sold off in a big way, it kind of becomes one of those just general risk off sort of environments. And like we saw equities kind of go down around the same time. So they aren't typically correlated, but since these guys have been in such a huge bubble, I think that they're just correlated by default. It's just liquidity in, liquidity out. Same thing with equity. So silver has a bit of a different sort of setup here, where it's kind of looking like it wants to drop a little bit more, but I don't really know if it's going to be anything spectacular. I kind of think it's going to be um, might see something like this where it's like then it heads back down again, where like it bounces off this like 96.5 level. I think that's probably reasonable. But again, that means that we're like halfway through some sort of B wave. And with gold, that also means the same thing. So you could see something like that develop where it ends up being like let's see here. You could do like you could have a much higher sort of retracement, like up to bull target 2, but you could still see this sort of ABC where it kind of rolls off like that. It just depends. Any questions about metals or any other thoughts on the matter? That was quite the drop though, 30%. Whoa. Like, what is this, Bitcoin? So, okay, let's look at oil. So oil's been surprising. After zero life from, from when Iran was bombed back in June, now all of a sudden it's becoming fun to trade oil again, which has been nice because it's been a little bit of a tough slog here. But you could really see, I think we could see probably back up to like $70 a barrel again, especially if there's some tension, Middle East, something like that. Because I actually kind of think this looks like a sea leg here. That doesn't really align, but you could probably see an extension up there if it ends up breaking this bull target 2. I think if if it does break this, between this zone, I'd say like 66.7, something like that. If it breaks that level, it'll head higher, probably to 70. Any questions about oil? Switch to gas. All right. So gas has been interesting as well. I think it's I think it wants to recover, like it wants to do this kind of ABC move and head up a little bit higher, but I'm just not sure yet. I'm thinking like, yeah, there's been a lot of buying, but there's also been just a ton of sell delta up here. So I think if we have a little bit of a retreat, and oil keeps going up, then I think gas would probably be a decent long. Yeah, I mean, I was kind of glad he got all those shorts anyways. I think that was timed well, where I was able to keep my sanity. But yeah, the long story short here is that this could be like a bull pennant that's forming. So you could get much higher prices in gas. It just depends. So I think for now, just kind of treat it like a kind of like an A leg, where you'll get a little bit more they could potentially get like a B wave pullback here. So yeah, that's gas. Stocks. Oh man, I wish I added the SOSX here when it was at 356 yesterday morning. What was that, yesterday? Yeah. Damn. I want to improve cost basis there. So I also kind of think that like a lot of stuff is selling off too. So stocks has got this pretty, now it looks like a pretty steep, I don't know if it's wave 4 or who knows, but now I think we've got this ABC down, and I still don't think it's done yet. Like I think it wants to test this 50-day moving average. So if we do get a test of that and then it bounces back up to, let's say, like 345 on like a relief rally, I am going to add some more SOSX and short it, or at least like add to my stranded shorts. Bitcoin is in trouble. So it is looking like we've got a 5-wave down, but I'm not sure where it's going to stop. Let's say it stops here. Okay, well, that would be helpful to people who have Bitcoin, but I don't know. Like now that like MicroStrategy is underwater with their Bitcoin trades, I don't know. Like it's like I think we are talking about it a couple months ago where I'm saying like I think people are trying to target that because they have their largest holder of Bitcoin. So if you can get them to sell some that adds liquidity to the market, you can buy it at a cheaper price. So I've never been a big fan of like, like if I had billions and billions of dollars, I would never put it all into like one asset or one asset class. Like you're just asking to be targeted there by speculators. So I think until Bitcoin finds a good floor, I don't expect it to really bounce back in a meaningful way. And what that means for the MicroStrategy here is that these guys are. I did add some hedges today. It is possible that you could probably head down to some like 100. It's like a psychological level. I don't see a lot of options gamma below like 115 or like 110. I think it's just kind of like in a no man's land right now. But you have seen a lot of buying. So I mean, these buyers are going to eventually want to return that price to where it left off. And in my opinion, you can make the assumption this is a ABC or a 5-wave down. Doesn't really matter. What does matter though is you did have a breach of this this final target, and then it's it's continuing that down. So I think no matter what their earnings are going to be, I think that the bulls will use it as an excuse to pump the market. So if you want to do some sort of speculators trade, you could try some options or something like that. I think that you'll probably see some whipsaw there, but even if you take it out when the implied volatility is a little bit low, you could still make money on the implied volatility heading up for that particular stock. Any questions about that? Okay, on Nvidia. So Nvidia here, this is actually kind of what I was talking about with the gold chart. So if I flip back to that, you kind of see the same sort of pattern. And that's kind of what I'm thinking here for Nvidia. I still think they'll probably bounce up and test this trend line again, but it's actually kind of what we already saw. So I don't know if it's gonna recover or not, but it certainly doesn't look healthy. That's for sure. I think it's possible you could see like one of these things where, let's say, it dips a little bit more, it bounces on the 200, but I still think that Nvidia's got some room to move down. And especially now with Tesla kind of heading back down, this pattern is kind of invalidated. So I don't want to try to conjure some sort of bullish case. I think that it's more realistic to see probably something like this to bear target too. So like the 375 level, I think would be a appropriate sort of buy the dip sort of level. Yeah, okay, and it kind of aligns with 50%. Yeah. So long story short here is that, I mean, things are looking a little weak these days, and especially with equities, I think that it would be a good plan to either add some downside protection, or I mean, again, I can't tell you what to do, but if you consider some downside protection, or on a bounce or something, maybe like if VIX calms down, then add some protection with some cheaper puts, that kind of thing. We kind of talked about some of that hedging stuff last week, but I think overall, I think it's overdue for some sort of correction, some sort of bigger pullback. So I don't want us to, I don't want anybody to be really like caught by surprise. I just think that a lot of these companies are all these AI investments and stuff that are really just sucking a ton of capital expenditure out of balance sheets and stuff, and we're not seeing a lot of cash flow from it. So companies like Microsoft are getting punished, and like Google today, like they had the same same sort of story. So I guess what I would say here is like I think it's time to maybe investigate some downsides, some downside projections here, but let's I still don't want to go too nuts with it because I still think you'll see a lot of like dip buying stuff, at least in the first wave. That's typically what you'll see. So while I give it kind of like a 60-40 like bullish sort of vibe here for like the last leg up, I don't think it's going to last long. So it's like you could go to sleep and then wake up in the morning and the market's down 2%. It happens, and I think that those days are getting pretty close. So especially with like a lot of the volume and stuff that's been piling up. So with that being said, that's about it. Any questions, comments, concerns? I've asked a couple times, but you guys are the usual suspects on the call. So you guys, I'm assuming, are the most savvy on the call. Cool. All right. Well, I'll stop the recording.